Hello everyone. I hope all of you will be fine. My name is Athar Mahmood and I welcome you all in this important session for AA Practice to Pass for March 2022. Well, dear students, this session is designed by ACCA to assist students who are going to attempt AA in December in March 22. Now, this session will be very helpful in coming exams if you all focus on the basic ingredients and elements. Well, this session will help you plan your studies in the last month, in this coming last month. That is very crucial, that is very important because this February is the last month before your attempt in March 2022. So we are going to discuss very important areas. We are also going to practice some frequently asked questions. We are also going to tackle some long questions and we will discuss the factors which can pass your paper or otherwise you can fail if you do not apply those things. So let's start with my intro on this very first day of this session. Well, as you know, my name is Athar Mahmood and I am currently teaching at SCAN School of Accountancy, Rawalpindi and Islamabad as well. Well, my qualifications include BSc Honor in Applied Accounting. I'm an ACCA member and I have also attained MS Management Sciences degree from Shahid Zulfikar Ali Bhutto University. Also, I have multi-dimensional experience, including audit and teaching experience of 13 years. I am specialized in the field of audit and the subject SBL, that is Strategic Business Leadership. I have 7 nationwide distinctions in different papers like business law, audit, business analysis, and strategic business leadership. I have been engaged with ACCA in different programs like AAA Practice to Pass session, last time AA Practice to Pass session that was held in December 21. I have also been participating in Coffee with Tutor program and other different programs that are relevant. So this was my brief intro. Well, what's the agenda of our program? How we are going to continue, how we are going to proceed in this program, that is very important. So today on 9th of Feb, we are going to discuss the audit risk, the most important area. The base of audit is audit risk, as we all know, and students normally focus on this area very much. But there are certain factors that they are focusing on this area, still they are not getting good marks, still they cannot pass the paper, or still they cannot score good marks. So there are some reasons that are hidden and students are not aware of these factors. So we are going to discuss these factors today on tomorrow on 10th of February 2022. We are going to discuss control systems, another crucial area of audit that is asked, that is examined in every attempt by the examiner, one of the favorite area and one of the most demanded area by the examiner, in which oftenly students miss very important things. Then on the third day of this program, that is 11th Feb 2022, we are going to discuss audit procedures. The audit procedures, you know, are very technical. They are not easy to understand and they are not easy to apply under exam conditions. Students often feel very demotivated when they see long procedures in the book and when they think that they have to memorize all these things. So how to tackle these procedures, how to memorize these procedures, and especially how to apply under exam conditions in the data of the exam, in the data of the question, that is a very important question. And we are going to deal this on the third day of this practice to pass session in March 2022. On the last day, 12th Feb 2022, we are going to tackle multiple areas like audit report, what is audit report, how it is managed, how it is prepared. OTs, very important area, which consists of 30 marks. So these 30 marks OTs are very crucial when we are talking about a student who gets failed at 45, 47. So OTs are very important, and the background of OTs are the bookish knowledge. So please wait for a second. So dear students, uh, can you hear me? Can you hear me loud and clear? If you can hear me, kindly text me in the chat box. So dear students, uh, can you hear me clearly? Can you hear me clearly? If you can hear me clearly, just write yes in the chat box. I want to know that can you hear me clearly or not? Yes, dear students. Okay. Okay, so I can see your messages and many of the students are saying that sound is clear now. So let's proceed. And we were discussing that on 12th of February 2022, we are going to discuss the audit report and the OTs and knowledge-based questions. Now, what are these knowledge-based questions? These are very frequently asked questions, straightforward questions. These are very bookish questions that are normally asked by the examiner, and students normally miss them out. They focus on audit risk areas, they focus on control system, they are going to memorize the audit procedures, but the easy marks, they miss the easy marks which are in the shape of knowledge-based questions. So if you are aware of some 30 to 40 knowledge-based questions that are very frequently asked by the examiner, and if you memorize them, you can easily take 20 extra marks. So these knowledge-based questions could be a very deciding factor when you are going to attempt a paper of AA in March 2022. So this is our agenda, and today this practice to pass session has started from 9th of Feb and it will end after 4 days at 12th of February 2022. Now, the point is that what is the passing rate of double A? Now, the paper you are going to attempt is not a straightforward paper. It is a theory paper. And you know that theory writing is not easy. Now, students can think that whatever they are writing and whatever quantity and the quality they are using and they are displaying to the examiner will be enough for pass. Now, in actual, the marking scheme is very important. The writing skills are very important. Reading appropriate area and writing in an appropriate format is very important to pass this paper. You can see if you go through the global passing rate, you can see at average it stays between 39 and 43%. Sometimes it's 43%, then it declined at 39%. So if we calculate the average, it is at 40%. Now this means that on average 40% of students passed normally, whereas 60% of the students failed. Now this is very important, that why in this typical theoretical paper, why students get failed. You can see approximately 60% of the students normally fail. So what is the reason? Now let's start with the reason. Now how to pass double A is opposite to why students fail in double A. You can see the first thing that students need to be aware is that they must read the book or the notes comprehensively. Now, what students do, they just read some of the chapters, they try to select among the chapters, and they sometimes ignore very important areas of the chapter. So what happens when they don't have the required knowledge, they can miss the OTs. They can select an option that is incorrect due to less knowledge of that area. So being knowledgeable is the first thing that you should try to achieve. So if you want to pass, you need to read the book. And if you are not going to read the book or notes, you are just going to attempt audit risk questions and control risk questions, then it will be very difficult to basically acquire that knowledge. That is very important. Now, second thing is revise the accounting standards before practice. Now, you have left with 25 or 26 days before the exam, and F8 or double A, where you are going to audit the financial statements, it is very important that you should be aware of the accounting standards. The accounting standard means that financial reporting level standards should be, or knowledge should be obtained by the student. He should be aware of IS 37, IS 2 inventory, IS 16 assets, IS 38 intangible assets. So if you are not aware of the required standard, that is the suitable criteria according to the auditor, then how can you identify the risk? Now, what is the risk? Risk is the misapplication of accounting treatment. If your accounting treatment is miscalculated or misapplied, or the accounting treatment is not according to the standard, then we will say that it is an audit risk. Now, if you are not aware of accounting standards, or if you passed your financial reporting paper way before 2 months, 3 months, or 3 sessions, then you would not have that clear grip on accounting standards. You could have missed some of the important points. So you need to revise first of all the accounting standards that will be applicable. Then the third thing is to memorize key points from ISAs like ISA 720, ISA 710, ISA 315. These are the ISAs. ISAs are the guidelines for the auditor. So these are the auditor's responsibilities that he has to manage. So if you have not memorized it, and when examiner is going to ask them in the paper, you are going to write in your own words. And when you write in your own words, you may miss very important concepts that should be written in it. So you can miss some of the points, some of the marks, and you get low score in the exam. Now, To tackle with these areas, this is important that you make your own notes in which you write the ISAs and the main requirements of ISAs and read from there and memorize from there. The fourth thing that is very important to pass is practice the previous exam questions from each area. Now, what are the current trends of the examiner nowadays? How can you get these trends? Apart from these type of sessions like practice to pass, you can individually practice and you can work on previous exam questions. If you go through previous exam questions, you can see how examiner is asking audit risk, how he has changed the level of control system deficiencies within last 3 years. You can easily understand the trend of the exam. If you want to follow the trend of examiner, you need to go back to previous exam questions like kit area, like past papers. They are very important because you can see always there will be a high gap between the level of book and the level of exam questions. In book, when you read audit risk, it is quite easy. You can understand what is audit risk, but when it comes to in terms of the application of audit risk, it is always difficult. So why students fail? Because they don't read book comprehensively, they have not revised accounting standard, they have not memorized important ISAs, or they have not gone through the previous exam questions. Also, an important thing that should be tackled by students before going into exam is ACCA resources like ACCA Education Hub, ACCA Practice Platform, or you should read different articles, examiner approach, and examiner comments. They are very important. So when you are writing theory, when you are writing the answer in audit risk, you are not aware whether you have written a strong answer or not. So you need to consult to that question's comments or that question's examiner's approach that is normally published on different ACC global resources. Also, a very important, very important key factor that normally the students who are studying can miss is the time management. So if you have grip on audit risk, if you are aware of the control system deficiencies, test of control, and you have memorized audit procedures, still you can fail the paper. And one and only reason would be the time management. So time management is an important skill to be attained, and under exam condition, it is very difficult to write a new concept on a timely basis according to the market scheme. So it is not easy, it is difficult, and you need to practice it. So before exam, before 10 days, 15 days, you should start attempting mocks and you should give yourself 3 hours and 15 minutes time, and you should challenge yourself that you should complete the exam or mock in the given time. So if you do that again and again in different mocks, mock 1, mock 2, then attempt mock 3, 4, 5. So go through 5 to 6 mocks. That is very important. So mocks, past exams, all these are very important and very necessary to understand the time management technique. Then the second last thing is attempt 3 full mocks. And due to these 3 full mocks, you can understand time management skills and you can understand the area in which you are weak so that you should have enough time. Now, an important factor is that you should not attempt a mock too late, means before 2 or 3 days of the exam. Now, it will not fulfill the purpose. Another purpose of mock is to understand the area in which you are weak. So you should attempt mock a week before the exam so that you may have 4 to 5 days to tackle, to change your approach, and to switch your weakness into strength. So you need certain time, certain level of time. And the last thing is that you should also use CB practice platform so that you must be aware of the environment and the buttons and the SOPs of that software through which you are going to attempt the paper. So this is important, and we are also going to write and practice different questions of audit risk and control risk and the procedure questions on practice to platform to practice for practice area. So we are going to apply them in ACCA CB platform as well. Now these are the important points. These are the areas. These are the factors through which you can pass double A. Otherwise, you can fail double A. So that is why 60% of the students generally fail because they are not following that systematic approach or they are missing 2 or 3 points between these things. Now, our objective of this session is to basically provide you the right direction so that you can understand the examiner mindset. What is the examiner's mindset in audit risk area, in OTs, in audit report? So it would be a mind opener or eye opener for all of you so that you can understand the misconceptions and myths around double A. Now let's start this journey. And before going to this journey, you should understand that ACCA CB practice platform is very important. If you want to pass this paper, kindly do attempt different sources at ACCA Education Hub and also read different technical articles and examiner comments that are there. Now, there are certain files in today's handout. So, if you go through those files, you will find this file, revision of audit risk. Now, first of all, before we start the discussion that how we are going to tackle the question of audit risk, let's start with the basic concepts of audit risk. Now, why auditor wants to identify audit risk? The reason behind is ISA 315. According to ISA 315, the objective of auditor is to identify and assess the risk of misstatement. So, according to ISA 315, this is our responsibility to identify and assess ROMM. Now, what is ROMM? What is risk of material misstatement? Inherent risk plus control risk combined are called audit risk. Now, whether due to fraud or error or at financial statements level or session level, through understanding the entity, environment, and internal control system. So, these are very important guidelines for the auditor that auditor must investigate the entity, environment, and internal control system so that he can understand the ROMM, risk of material mistake. Now, if we go through entity, environment, and internal control system of the organization, we can also get the business risk. But auditor is least concerned about the business risk. He is more concerned with the audit risk. So why he is going to identify ROMM? So that they are providing a basis for and implementing responses to the assessed risk of material mistake. Now, all this activity and the conclusion and the reason of all this activity is the responses. We are going to evaluate entity, environment, and control system through which we are going to identify and assess ROMM, risk of material misstatement, that is inherent risk and control risk. And by understanding them, we are going to prepare our responses. Responses are our detection risk. So ISA 315 gives us an insight that we should go through entity, environment, and control system. Now the entity, environment, and control system also gives rise to business risk. The business risk is the achievement, any event that have adverse impact on the achievement of the company objectives is called business risk. You can see there are some internal risks like staff turnover, strike, machine breakdown, management switching to another organization or competitor, like if organization is going to implement a new IT system or there is a high cost per unit process. You can see all these factors are entity based. So auditor is going to study all these factors, but he is not concerned with business risk when he is going to study the staff turnover rate, when he is going to see the CV profile of the management, when he is going to evaluate or apply test of control on new IT systems. When he's going to go through the sales cycle, sales process, purchase process, he's not focusing on businesses. He is basically focusing on audit risk. Now, the business risk is the concern of the management, so that suitable strategy should be in place to avoid any obstacle. So these are the important points. Like you can see, external risk, shortage of raw material. These are environment related issues, and the internal risk were the issues related to entity and the internal control system of the organization. And the external risks are the risks that are related to the environment. So that's what we discussed in above ISA 315 application, that auditor should identify or understand entity, environment, and internal control system. So internal risks are all the factors of entity and internal control system, whereas all the external risk factors like market demand, new substitute, new competitor, or a new legislation coming in, or change in currency exchange or cases, all these are the factors that are related to the environment of the organization. So being auditor, we should study the internal and external business risk factors. The purpose of this factor is to identify the audit risk. Now, what is audit risk? Risk of material misstatement means inherent risk and control risk. And the third element of audit risk is the detection risk. Now, according to ISA 315, we are going to identify inherent risk and control risk by understanding entity, environment, and internal control system. And we will design in response to that trauma. We are going to design the audit response. And the audit response is the detection risk, the level of detection risk that we will apply. So, when we talk about inherent risk, like you can see, own assets, if a company owns its own asset, or there is a possibility that they have acquired assets on lease. So in which scenario there will be an inherent risk? Now, inherent risk is the risk in which the functions or operations of the organizations are inherently risky due to the operations of the organization. Like if it's an airline industry, company would acquire aeroplanes on lease terms. And as they have acquired aeroplanes on lease terms, what will happen? Complexity will arise when accountant is going to adjust or record these transactions. So we know IFRS 16 will apply, and the calculations of IFRS 16 will not be straightforward, and inherent risk will arise. Now, the reason behind this inherent risk is not auditor. The reason behind this inherent risk is the functions and operations of the organizations, the way they work, the way the customer behave, the functions and the operations of the organization. Same is the case with, like, if a company is preparing a product like pharmaceutical product which may have different side effects, so there is a fair possibility and chance that some of the cases would be filed against them. So due to the product of the organization, the risk of being legitimately asked is high. So IS 37 application, like probable outflow, should be applied, and the provisions amount should be assumed, and it should be written in financial statements. So now this recording, provision recording, that is required by IS 37, now accountant has to estimate the amount according to IS 37. Now, all this recording was caused by the product's nature. So due to the nature of product, now accountant has to record a transaction that is complex, that is inherently complex. That is why it is called an inherent risk. The second factor is control risk, when there is no segregation of duties, when there is no approval, when there is no supervision, reconciliation, control accounts. So control risk arises. So when inherent risk and control risk is increased, so it will have impact on auditor's response. Now he is going to change his response, and he is not going to apply same skepticism level. So when there is an increased inherent risk in the organization, when there is increased control risk in the organization, what we will do? We will emphasize the need for professional skepticism. We are going to enhance our professional skepticism. We are going to assign more experienced staff to complex or risky areas, especially in IFRS 16, especially in IFRS 15, where revenue recognition is an issue, especially in provision basis, where IS 37 will be applied, especially in inventory areas, where inventory can get obsolete and IS2 rule like lower of cost or NRV could be applicable. So in these complex areas, we are going to apply or assign more experienced staff. Also, we are going to enhance our supervision. We will start unpredictable style of working. We are going to make changes. We are going to make changes in our procedures. We are going to apply more procedures. We are going to less rely on control systems because controls will be weak. We are going to apply more substantive procedures. We can call expert at any time if we feel, and the review procedures will be enhanced. So all these are the audit responses. And you will be aware that when examiner asks you to write audit risk in the exam, in the secondary part, he's also going to ask you to write audit response as well. So always try to think of these audit responses. These are generic audit responses which you can use anytime when you are attempting a question. So you should memorize that whenever there is an inherent risk or increased control risk, professional skepticism will be increased, more experienced staff will be used, more supervision, unpredictable approach, more substantive procedures, less reliance on systems and controls, and more frequent review procedures. So all these are the important responses that are generic responses that could be used. Now, then comes the audit strategy and how strategy should be applied. Then from audit strategy, audit plan is implemented, audit plan is designed at managerial level, audit strategy is designed at partners level, and during the course of designing of audit plan and audit strategy, ISA 315 is also going to be applied. Now, risk assessment procedures. These are the 4 risk assessment procedures: through inquiries, through analytical procedures, through observations, and through inspection. We are going to identify the risk. Risk means inherent risk and control risk. So these 2 risks are very important. And you know that examiner asks you to write these audit risks very frequently. Every time in AA, you can see in the last few sessions, every session paper have a question 15 that is relevant to audit risk, where examiner is also going to ask you to write the audit responses as well. So analytical procedures there are 2 ways of identifying audit risk. One is analytical procedures and other is going through inquiries and observations. So these are the 2 styles that are frequently asked by the exam. Now let's go through a question to understand what we have discussed. Now let's start with that question, sycamore. Now this is the question, sycamore. It is included in the handouts for today's handouts. You can download it from there. Now, if you start reading the first 2 paragraphs, then we will discuss how to write and how to identify the auditors. Now, if you have read the first three paragraphs, two or three paragraphs, and if we go to the requirements, now this is the requirement which we are talking about. The requirement B, describe 6 audit risks and explain the auditor's response to each risk in planning the audit of SICOM or Science. Now the examiner has asked you to write 6 audit risks, and for each risk you are going to explain the audit response. Now, how you are going to tackle the question like that? Now, for example, you are going to write audit risk in a column, and then you are going to write the audit response. Now we are using CB practice platform so that you should also focus on this environment, and you should also use this CB practice platform whenever you are practicing an exam. Now, what should be the format for the writing style of the audit risk? So normally when we discuss with students, the normal way or the normal format when you are going to write the audit risk should include, first of all, you should start with the slide data, the event that is written in the data, then you can relate it with the required accounting treatment. Then you should write ROMM, and ROMM stands for risk of material misstatement. And risk of material misstatement means inherent risk and control risk. Combined is called ROMM. Then you should tell the examiner that which head will be overstated or understated. Now this is a basic format which should be used by the students. These elements must be there whenever you are writing the answer for the audit risk. Now, if we go back to data, now here in third paragraph, you can see during the year, Sycamore has spent 1.8 million in developing several new products. These projects are at different stages of development, and the draft financial statements show the full amount of 1.8 billion within the intangible assets. Now this first issue started from the word during and it ends at the word assets. Now in this question, in this data area, the examiner has asked you that the company has capitalized full amount of 1.8 million in the intangible assets, and he has asked you to write the risk. Now, how you are going to start writing? First of all, you will start with the data. So now the data states that Sycamore has invested 1.8 million in the development of new products, and all of this amount has been capitalized. Now this is the issue we have discussed. This is the data. These are the words that are designed from data. In your own words, you can write the issue, you can write from the data. Now, when you have discussed this, then comes the next point. That is the required accounting treatment. Now, what is the required accounting treatment? You should be aware of that this is a matter of IS 38. And you are going to now write the requirement of IS 38. What is the requirement? What is the suitable criteria of capitalizing this 1.8 million? You are aware that this 1.8 million can be capitalized if certain criteria is met according to IS 38. Now you are going to write this accounting treatment. The accounting treatment is that according to IS 38, development cost may be capitalized if the criteria is met. Now this is the simplest accounting treatment according to IS 38, and we have written it in 1 or 2 lines. We are not going to give more explanation in accounting treatment. We are just going to give the hint of the accounting requirement. And we are going to switch to the ROMA. We are going to give our full time to write the ROMA, risk of material misstatement. That is the exact thing that is asked by the examiner. Now we are going to write the risk. Now what is the risk? Anything that is recorded other than the criteria or the required accounting treatment is risk. Now, what are the possibilities? The accounting treatment that is required is that development cost may be capitalized if the criteria is met. Now, what is the risk? What could be the intentions of the management? Management intentionally would want to overstate the assets so that it look good for the investors. So to do that, what they can do, they can capitalize some of the development cost which may not have fulfilled the criteria, the required criteria. So this is the risk that among this 1.8 million, there may be some of the cost that is capitalized which has not fulfilled the criteria. So this is a simple risk. Now you are going to write this risk in the language of probability or possibility. So you will write like there is a possibility that this 1.8 million may include some of the cost which could not have fulfilled the criteria. Now this is the risk that among this 1.8 million, there could be an amount of 1 million or 2 million or 0.5 million, which could have been included in this capitalized cost, whereas it should have not fulfilled the criteria. This is the risk. And due to this, if this risk is materialized, if this risk is present, exist in the data or company's financial information, what will happen? Which head will overstate or understate? So certainly it would overstate the assets figure. So this will overstate the assets in financial statements. So this is how you will write the audit risk, especially the audit risk that is related to the accounting standard. That is the requirement of accounting standard. Like this, in this risk, you can see that there is a requirement of IS 38 which should be fulfilled. Otherwise, it will be a misstatement. Now, this is a risk of material misstatement. So this is one way of writing this risk. Now let's have another example. The risk. Let's move to next part of this paragraph, this one. In order to fund this development, 2 million was borrowed from bank and is due for repayment over a 10-year period. Now this is the data. So how we are going to write this? First of all, we will write the event. We will write the summary of the data, what has happened. Now Sycamore has taken loan of 2 million for a period of 10 years. Now this is the data, this is the event that has occurred. Now what is the required accounting treatment? If we go back to format, you can see after writing the data, we are going to think of the accounting treatment. What would be the required treatment? Now the treatment would be that this 2 million should be apportioned between non-current liability and current liability, and finance cost should be calculated and it should be charged to income statement, to profit and loss statement. Now this is the accounting treatment. Now let's write the accounting treatment in short. You don't need to write IFRS 9 this time. This is the requirement of IFRS 9, but you can write it without mentioning the name of the accounting standard. You can simply write a point. For example, this loan should be split correctly between non-current liability and current liability. Also, it will have effect on finance cost as well. Now this is the accounting treatment. According to the pro forma, we have written the data, we have written the accounting treatment. Now we are going to write the ROMM. Now what is the ROMM? What is the risk? Any recording, any disclosure, any presentation that is other than or opposite to the accounting requirement is the audit risk. Now what is the possibility? The possibility is that the company have incorrectly classified or calculated non-current liability and current liability, or there is also a risk that finance cost or interest charge has not been properly calculated. Now this is a risk of miscalculation and it will give rise to a misstatement. Now how we are going to write this from a risk of material misstatement? So we will write there is a risk that split between non-current liabilities and current liabilities are wrongly charged or calculated. So if that is wrongly calculated, then of course it will give rise to a misstatement. It will be a wrong calculation, it will be a misstatement, and this calculation will not be according to the accounting standard. Also, finance cost may be miscalculated or accrual missed. Normally, this risk of the accrual being missed is a very important risk in terms of when we are talking about the expenses in income statement. Now, what will happen? If finance cost is miscalculated or accruals are missed, so it can understate the expenses and overstate the profit. Now, the impact or the effect of this risk should be shown to the examiner. You should give the implication of this. What will happen if this occurs in actual? What would be the effect in ledger system, in account system? Which account balance will be overstated or understated? So you are not going to just give the explanation of audit risk, but you are going to give or explain the areas of the fresh statements that will be misstated. This is important. Now, this is how you can write audit risk by implementing this format. Like if we go back to question, now in this line, the last line, during the year, a review of plant and equipment in the factory was undertaken and surplus plant was sold, resulting a profit on disposal of 210,000. Now, once again, this is a risk. First of all, we are going to write the data or the event. Sycamore has disposed a plant for $210,000. Now this is the event. Now what is the accounting treatment? Now the accounting treatment is that there is a calculation involved whenever an asset is disposed. So it includes carrying value, it includes sales proceeds, and it also includes that the asset should be removed from asset register and depreciation should not be charged for this asset that has been removed according to IS 16. Now this is all the accounting treatment. So calculations must be done right and asset should be removed from asset register and depreciation not charged for this asset. Now this is the accounting treatment. Now what is the risk? Opposite to that, whatever you have written in accounting treatment, like calculations must be done right. So incorrect calculations of sale proceeds or carrying value of the asset is the risk. You can write there is the possibility that incorrect calculations are made for profit of disposal or asset still written in the register causing wrong depreciation against that asset. Now this is the risk. Now if this risk is present, if actually this asset is not removed from the register and depreciation is calculated, now what effect it will have? it can it can overstate the expenses. Why? Because expenses will be overstated due to the reason being the depreciation should not have been charged. As this depreciation has been charged, so now the expenses will be overstated. Consequently, profits will be understated. It can overstate the expenses and understate the profit. Now, this is how you are going to write the audit risk whenever the risk that is related to the accounting standard. The format for writing this type of risk is very easy. You can start by the data that is given by the examiner, then you will relate the required accounting treatment, then you will write the ROMM by converting accounting treatment into risk, and then you will tell the examiner that which head will be overstated or which head will be understated. Now, there is a second class of audit risk which doesn't have that level of implication of accounting standard, where you will see that IS 38 or IS 16 is not applied directly, but this information will have impact on the financial statements. Some of the figures, some of the ledgers or account balances may be misstated. Like if we go back to this question, Sycamore, you can see this head. Now this paragraph. Sycamore's previous finance director left the company in December 20x4, and after which it was discovered that he had been claiming fraudulent expenses from the company for a significant period of time. Now this is the line, this is the data that is provided by the examiner, and he is telling us that a director has left the company and we have discovered that there were some fraudulent expenses that been claimed by the previous director. Now a new finance director has appointed, and now this new finance director, who was previously a financial controller of the bank, and she has expressed surprise that Mapleco had not uncovered the fraud during the last year's audit. Now the last line of this paragraph relates to the first requirement of this question, where state Mapleco's responsibility in relation to prevention and detection of fraud and error for 4 marks. But for now, we are not having discussion about the fraud implication. We are discussing what is the audit risk in it. Now, this information that is gathered by the auditor is very important. Now, you need to think that what effect this information will have over the integrity of financial statements. Now, if a finance director has left, and after he has left the company has discovered that there were some fraud expenses. Now, what is the risk? What is the possibility? What could happen wrong? Which area of the financial statement could be misstated due to this information? Now, there is not a, we can say that application of accounting standard is necessary every time. Yes, IS10 can be there, IS10 adjusting event, if there are any errors that are discovered after the year end, yes, they have some adjusting event application, yes. But without linking it with the required accounting standard, we can write the audit risk sometimes if we are aware that what is the risk at financial statement level due to this information. Like if we are going to write the audit risk for this information, how we are going to write? We are not going to follow this format where we started with data, then we discussed the required accounting treatment, then we discussed the ROMM, and then we told to examiner which head would be overstated or which head would be understated. Now we are going to write it very simple. we are going to write? So previous finance director left the company, and it was discovered that he had claiming fraudulent expenses from the company. Now, once again, we have started with the data that was provided by the examiner in the question. Now, what we will do, we are not going to relate it with the required accounting standard. We are going to write the audit risk in general terms. Now, if a finance director has left the company and they are aware now, company is aware now that there are some transactions that are fraudulent in the nature. Now, what they would do, they would identify those fraudulent expenses, and what they need to do, they need to write off them. They need to identify these events, these transactions, and they should write off these transactions. Now, what is the risk? The risk is that the expenses in the financial statement may include some of these fraudulent expenses. These are fraudulent expenses. These are not genuine expenses. These are fraudulent expenses, and if they are there, what will happen? The expenses will be overstated and profit will be understated. So these expenses should be write off. Now, if we are clear about the risk, then we are going to write it. Now, what is the risk? There is the risk that many fraudulent transaction would be still recorded in financial statements, whereas these transactions should have been written down or written off. So this is the risk, that these transactions are still there, they are still recorded, they are not adjusted, they are not written off. So this is the risk. Now, you don't need to relate with the relevant accounting standard. You can just write directly the risk. So whenever you are writing this type of risk, you will start with the data, then you will directly write the audit risk, and you will also tell the risk of overstatement or understatement. So we have written the data, we have also written the audit risk. Now we are going to write the overstatement and understatement. So you don't need to write the overstatement or understatement in a new line. Okay. We can write like causing overstatement of expenses and understatement of profit. Now this is a complete risk, and you can earn complete marks if you have written and if you have followed this format. Now this is an easy format. Now you can see that whenever you read the question, you will see these two types of risk. like this one. The new finance director has informed the audit engagement partner that since the year end, there has been an increased number of sales returns, and that in the month of May, over zero point 0.5 million of goods sold in April were returned. Now, if you go through this risk, it seems to be a general risk. This is not a specific risk. We could have converted it into an IFRS 15 risk, but we can state the implication or the effect of this sales return in the month of May of 0.5 million on the financial statements. Now the risk is clear and we don't need to state the accounting treatment. We know that these sales that were recorded in April amounting 0.5 million, if they are, so this 0.5 million recorded in sales should be adjusted back because they are not in actual sales, they are sales returned in the next month after the year end. So the risk is that the sales return of 0.5 million may include some of the sales of April month. So for this year, these sales should be written off. They should not be part of the revenue for this year because we are aware that subsequently after year end, they were returned by the customers. So we can directly write this audit risk. Now, how we are going to write this risk directly? Well, let's go there and just write this point. Point 0.5 million of sales were returned in the month of May for Apple for sales of Apple. Now this is the data. This is what have happened according to the data that is provided by the examiner. Now how we are going to write the risk? Now once again here you can see that these sales which are still written in the month of May are not the valid sales because they are returned after year end. It could be a way or method of the Sycamores accountant to increase the sales for the month or for the year. So how we are going to confirm this and how we are going to write the audit risk for this purpose? It is once again simple. We are going to write it according to the data that is provided. For example, the sales which relate to period and are removed after year should be adjusted accordingly. Now, there is a risk that the sales figure for this year may include some of the sales that have been returned in May, which will increase or overstate the revenue and profit figure. Now you have both options available. If you are aware of the accounting treatment, you can also write accounting treatment as well. But you must also consider the time available for writing that audit risk. You must not write an audit risk for more than the given time that is available per time. Now you should be aware, like if you can see that there are 6 audit risks that are asked by the examiner to be described, and it carries 12 marks. So there are 6 marks for writing an audit risk, and there are 6 marks for writing the audit responses accordingly. So you are going to write an audit risk for 1 mark. You should not indulge yourself. You should not give more explanation than required. You should write, if you are going to write an accounting treatment, you should try to wind up the required accounting treatment in 1 or 2 lines. So this is important, so that you should be able to time manage your paper. This is important. Now if we go back to the rest of the audit risks, like this one, Maple attended the year-end inventory count at Sycamore's warehouse. The auditor present raised concerns that during the count there were movements of goods in and out of the warehouse, and this process did not seem well controlled. Now, if you have gone through chapter 8 and chapter 7, where you have read the control systems at the warehouse and the test of controls that should be applied at the final year-end stock take, one of them was that there should not be the movements within the stock take. So if there are movements in the stock take, there is always the risk that a piece of element or a piece of inventory could have been missed, or it could have been counted twice. Now this is the risk. And what will happen? Yes, it will overstate the inventory value in the current assets. So if we are going to write this risk, we will start by writing the data, the event from the question. Now, what happened? Madhuko attended the inventory count. Writer present raised concerns that during the inventory count movements goods in and out. So, auditor is concerned about the movements of goods in and out during inventory count. Now you are not going to copy paste all the data from the question in your answer, because it is not justifiable. It doesn't carry these marks. The marks that are there are for the calculation of materiality level if given, if the data is given, or the marks are available for writing the accounting treatment and explaining the audit risk and effect on the audit statements. So you are not going to explain the data, or you are not going to copy paste all the data from the question. The most important thing, or the basic or fundamental fact, should be copy pasted and should be written to justify your subsequent discussion. Now, as you have written or given explanation that what has happened, now what is the risk? So the risk is that there is a probability or possibility that inventory count may have mismanaged and counting could include an asset twice or completely missed. Now, this is the risk that an asset that is counted twice. What will happen if it is counted twice? It will overstate the inventory figure. Now, it is very critical that if the asset figure is counted twice and the assets figure, inventory figure is overstated, what effect it will have? It will decrease cost of goods sold and it will increase the gross profit and net profit. Now, this is a common way of manipulating the financial statements, and one should be aware of such possibilities. Now, examiner wants to understand and to see whether you can identify these types of minor and major risks or not. So what will happen if this happens? It can, if asset is counted twice, it can overstate or understate the inventory valuation, because we know that there is a possibility of miscalculation, so it can move both ways. If it is counted twice, it will cause overstatement, and if it is missed, it will cause understatement. So this is the risk, and this is how we are going to write. We don't need to relate it with IS2. Now this issue is not related with the lower of being lower of cost or NRV. Now this issue is different. This is the issue of quantification of inventory. This is not an issue of valuation of the inventory. So what will happen if quantity is not correct? The valuation will not be correct. So this is simple and this is straightforward. So this is how one should write different sorts of risk. Another risk that is sometimes not clear, that is not presented separately, but that is hidden and that is very important. So these type of risks may include, like we can see that in order to fund this development, 2 million was borrowed from the bank and is due for repayment over a 10-year period. Now, the data states that the bank has attached minimum profit targets as part of the loan covenants. This is a very important information. Minimum profit targets as part of loan covenants. Now, once again, this point is very important as far as the auditor is concerned, because it can have multiple possibilities for the sake of audit. Now, how it can have multiple possibilities? First of all, we need to write down the data or the event that has happened. Now, what has happened? Loan contains minimum profit related covenants. Now, this is the data. So as loan contains the minimum profit related covenants, what will happen if we are in breach of these covenants? We have taken loan from the bank, they have given us the profit related targets and we are in breach, what will happen? They may ask us to return the whole amount immediately. Now, this is the consequence of that. So, what would be the accounting treatment? The accounting treatment would be to adjust and to convert a non-current liability into current liability because we are going to pay it sooner. We are going to pay it in coming 2 or 3 or 4 months. Now it is not a non-current liability anymore. It will be converted into current liability. So this is the risk that it is still written as a non-current liability, whereas we are in breach of the covenants that are attached by the bank. Now, how we are going to write it? We are going to write it as simple as possible. Now, loan covenants, loan contains minimum profit related covenants, and if these covenants are breached, the loan will be payable immediately. Now, this is the whole consequence that we have described for the example. Now, we are going to link it with the audit risk. What will be the effect for the accountant in the financial statements? The effects are simple. In that case, liability should be converted into current liability because we are going to pay it not more than 12 months. We are going to pay it very soon. So there is the risk that we have breached the covenants and loan is still written in non-current liability. Now it will be a misstatement because by doing this they are not following the accounting standard requirement. So what will happen? So of course it will overstate or understate the liability. So this is how these risks can be written and these can be adjusted. So this format like data, the accounting treatment, the risk of material misstatement, and the possibility of overstatement and understatement. So they are important. And one should think of the possibility in different scenarios. So what effect it will have. Now, if we go back to the question, we can see that we have discussed mainly all of the important areas related to the audit risk. Now the second question is how we are going to write the audit response, because examiner has asked us to explain the required audit response for each risk. Now, audit responses are as important as the audit risk because they carry equal marks. So what happens? Students prepare how to write audit risk, but they forgot to prepare the audit response. They are equally important and one should take care of that, and they should have enough preparation and enough application of the questions, and he should go through at least 5 to 7 questions and he should be able to understand the risk and the relevant responses. So there are some generic responses that we discussed in the start of our today's session. There were some responses that whenever there is an increased risk, we as an auditor are going to increase the skepticism. We are going to increase the reviews. We can hire an expert. We would be more unpredictable. We are going to have more substantive testing, and we are going to less reliance on the control systems. So this is the generic response that we discussed through these slides that are included in the handouts. You can download them and you can go through them. But the important thing is that these generic responses are not enough to earn good marks against each risk. You need to change these responses. You need to write a response that is specific to that audit risk, that is specific to that audit risk. You may include some of the generic audit risk, but overall your approach should be specific to that audit risk. Now, how we are going to write the responses for these audit risks that we have just written here. So these are the audit risks that we have discussed. Now we are going to write the audit responses here. And before we are going to understand the way, the methodology or the format for audit response, we are going to take a 15 minutes break before going into this audit response, and we will come back after 15 minutes and we will continue our discussion. So it's a 15 minutes break. So we will be back in 15 minutes. See you after 15 minutes and we will discuss the level or the justification or the arguments that will be built for the audit responses. So, dear students, welcome back. Now, we are back after 15 minutes break. And before going to break, we were discussing that how to write audit response against the relevant audit risks. So, we have just learned how to get complete 6 marks from the examiner by writing good audit risk format. Now we are going to discuss how we can get good marks when we are talking about the audit response. Now this was the first risk that we wrote. The Sycamore has invested 1.8 million in the development of the new products and all of the amount has been capitalized. Now, we told the examiner that there is a certain criteria, the development criteria that need to be fulfilled, and the possibility is that this 1.8 million may contain some of the cost that has not fulfilled the criteria. So how we are going to write down the response? Now we need to understand that we are going to write the response that is specific to this issue. We may use some words that are generic responses, but we are going to first of all focus on that and we are going to understand what are the areas in which auditor has to work to find out whether this risk is there or not. Now, what was the risk? If you see exactly the line where the risk is written, so this is the risk. There is a possibility that this 1.8 million may include some of the cost which could not have fulfilled the criteria. So what would be our response? It is very straightforward that what would be our response. Now, if we simply note down this audit risk, our response, if we try to write a simplest response against this risk, it would be that we will obtain the breakup of development expenditure. Now, why we will obtain the breakup? Because this breakup will include this 1.8 million classification and categorization. Now, what are the vouchers and which vouchers constitutes this 1.8 million? So this breakup will help us to identify and evaluate individually each voucher that is included in this 1.8 million. Now, what is our focus? Our focus is that there might be a voucher, there might be an entry of a development product that is included in this development cost, which has not met the criteria. So, to be aware of these things, first of all, we need the breakup. And when we have obtained this breakup, what we are going to do? We will obtain breakup of development expenditure and the risk is that some of the cost which could not have fulfilled the criteria. So what we will do? And will perform test on sample basis to confirm the criteria of IAS 38. Now, this is the simplest audit response that is embedded, that is being made by this line where we wrote the audit risk. Now, this was the audit risk. Simply by saying this audit risk, we have changed the wording and we have started with the breakup and we are going to confirm because there was a risk that some of the items may not fulfill the criteria. So we are going to check individually every possible voucher and project and development area which have been included against the criteria of S30. Now this is the simplest audit response. Now, if we want to increase it, if we want to switch it, and if we want to enhance our writing skill, and we want to cover more areas that are relevant to this risk, now what we can do? Now, we can add some of the words in this audit response so that it may become more professional. Like, we will obtain breakup of development cost or development expenditure and will perform test on sample basis to confirm the criteria of IS 38. So if you have memorized the procedures of R&D, it would include the minutes of the meeting, it would include the correspondence, it would also include the project documentations and also the budgets. So if you have memorized the procedures from R&D in chapter 8 or chapter 10, then you can use some of the supporting documents here. So this is how you are going to write a simple response. So if you want to make it look like more professional, you will try to enter some of the words from the procedures related to that area. Like in R&D, we discussed different supporting documents. So what we can do, and we'll perform test on sample basis. We will test what minutes of the meeting and project documents. From where these words came, these are the words written in the procedures of research and development cost. So if you are aware of the procedures on R&D, you can use one or two relevant document to these risks. Now this risk is related to the valuation assertion. This risk is related to the valuation assertion of development cost. Valuation means that this specific cost should be valued according to the relevant accounting standard. So you should be aware of the valuation procedures, and if you want to write a good, more professional looking response, you can include these type of words like we will obtain breakup of development expenditure and will perform test test on these test on sample basis and also confirm from minutes of the meetings and project documents regarding criteria of IS 38. So this is how you are going to write a good response. You will start the response by simply looking at the risk you have written in the audit risk column. You will write first of all a simple audit response by changing the wordings of the risk that is already written, and then you will think of the relevant procedures of that area that you have covered in different chapters, and the most relevant supporting documents would be added in that response, and this response will be converted into a good looking professional response. Now for example, let's apply this style of writing audit response on the next audit risk. Like you can see, Sycamore has taken loan for 2 million for a period of 10 years. This loan should be split correctly between non-current liabilities and also it will have effect on finance cost. There is a risk. Now we will focus on the risks. Now this is the risk. Now what we have studied, we should start writing response from the risk. that we have already discussed in the right in the left column. Now we will start checking this thing directly. So how can we do that? The risk was that split between non-current liabilities and current liabilities are wrongly calculated. So we should write that, confirm that the split between non-current liabilities and current liabilities are correctly calculated. Now, this is the first response from our first risk. This was our first risk, and against this first risk, we have written this response that is very much in same wording. Now, let's write the other response. The other risk was that finance cost may be miscalculated or accrual missed. Now, what would be the next response? That calculate the finance cost to confirm the calculation. Now, as there were two risks in this loan activity, we have written two responses. So each risk will be supported with the relevant response. Now, the first step is complete. That was that we must write a simple response by reading the risk first. So we have a sort of copy pasted, but we have used different wording which showed that what response should be applied directly by looking at the audit risk. Now, what we are going to do, we are going to think of the relevant audit procedures which we studied for the loan liability. Now, you should be aware that whenever a loan is taken, the relevant procedures include the inspection of the loan agreement. So what we do, we inspect the loan agreement, we confirm the rights and obligation, we also confirm existence through bank statement, we also check the correspondence from the lender or the bank. So these are the three documents that are very useful for us. So the important thing is that the loan agreement document is very important, and we know that because we have memorized the procedures and we are aware of the procedures. So we know that these documents are inspected at various level of the procedures when we are going to apply these procedures on loan. So we are going to include these documents like loan agreement. So how can we do that? We can start by inspect the loan agreement and confirm the figures and interest rate used for the calculation. Now, as we have discussed that we are going to confirm the split between non-current liability and current liability, how we are going to check that? So initially we wrote a very simple audit response, but after writing this simple response, we are going to basically enhance that audit risk. And how you can do that? We can use the procedures, the documents that we used for that specific area while we are going through the procedures. So we know that loan agreement is a very important document, and through loan agreement we can understand the split between non-current liabilities and current liabilities, the maturity date, the interest rate, the payment will be in arrears or in advance. So all this information and all this calculation depends on the figures that are written in loan agreement. So this means that unless we have related this calculation with the loan agreement, this response will be a waste. So by writing and by linking it with the loan agreement, we have successfully written a good looking professional response. Now, if we come back to this area, calculate the finance cost to confirm the calculation. That was the second response for our second audit risk. Now, when we discussed in the procedures, discussed the finance cost has a risk of not only calculation error but also some of the accruals may have been missed. Now, if you have memorized the procedures of finance cost, you should be aware that this is an issue of completeness assertion. The accruals are the issue of completeness assertion, means that the interests that should have been charged for 12 months have not been charged, or the accountant may have missed 2 or 3 months. So the interest rate is not completely charged. This is the assertion of completeness. For this assertion, what we used to do, we used to perform analytical procedures. We used to compare this year's finance cost figure with previous year's finance cost figure, or we could have calculated finance cost to loan ratio and compare it with the last year's finance cost to loan ratio to see whether there is a possibility or whether there is a corresponding change in finance cost. So finance cost should have been changed, like if there is an increase in 40% in loan, the finance cost should also be increasing at 30%, 35% or near 40%, showing the level of interest rate that has been increased due to taking of a new loan. Now, if this is not in comparison with the loan arrangement, like loan is increased by 40% and finance cost is increased only by 20%, so there is a risk that some of the accrual may have been mixed. So let's come back to our point. During the study of procedures, we discussed that analytical procedures or comparisons are very helpful to understand and to confirm the accruals. And the second thing is that cash book or bank statement, post-year bank statement may also be helpful to identify the interest payments that are made after year end, and the risk that being that they have not been charged before year end for this specific year. So for this purpose, what we will do, we will inspect the bank statement to confirm that all payments related to this year have been recorded. Now, how can we do that? We can inspect post-year bank statement. The payments that are made after the end, but they are related to the payments before year. So from where we can get these payments? We can get these payments from post-year bank statement. So once again, these payments related. So this is the second point that is included in this response, this simple response from the procedures. And the second procedure that we identified for finance costs that we discussed when we were studying procedures is the comparison to see whether the completeness occurred there or not. So comparison can also be made with previous year to see that finance cost is aligned with previous trend or not. So what we have done, we initially wrote the simple audit response, and then we came back and we looked at them, our simple responses, and we thought of the relevant audit procedures, and we included some of the important relevant procedures or relevant documents in our audit response, which made our response more professional and more score worthy. So by doing this, you can enhance your scoring capability, and you can get complete 6 marks for all these audit responses. Now let's move to, let's say, this one. Now Sycamore has disposed a plant for 10,000 calculations. This. Now where is the risk? This is the risk. There is a possibility that incorrect calculations are made for profit of disposal or asset still written in the register, causing wrong depreciation against the asset. So there are actually 3 risks. The first risk is that the possibility of miscalculation of profit or disposal. The second risk, that asset is still written in asset register. And the third risk, that depreciation is wrongly calculated. Now, against all these 3 risks, we are going to write our response. Now, let's start with the first risk. What would be the response if we have a risk that there is a possibility that incorrect calculations are made for profit? Now, what would be our response? We would recalculate the profit on disposal to see or to confirm the accuracy. This was the first risk. We have written the relevant response for that first risk. Now the second risk was that asset is still written in asset register. So how we are going to confirm that? We are going to inspect the asset register to confirm that asset has been removed. Now this is our second risk. Now what was our third risk? That wrong depreciation may have been charged, especially for those assets who have been disposed. Depreciation should not have been charged. So confirm from depreciation schedule that depreciation is not charged against the disposed assets. Now these are the simplest audit responses we have written in response to these audit risks that we wrote initially. Now our first step is complete. Now under second step, what we are going to do, we are going to enter some of the supporting documents or some of the procedures from the relevant audit procedures of these types of areas. Now, if you memorize, when you would have studied the chapter of audit procedures, and there were some responses and there were some procedures related to assets additions or assets disposal. So you would be aware that carrying value would be confirmed through the asset register, and the sale proceeds would be confirmed through bank statement. Now, as we have written the response that we are going to recalculate the profit on disposal to see the accuracy. Now, first of all, we are going to confirm the data. Now, how we are going to confirm the data? Confirm the carrying value from asset register and sale proceeds from bank statement, and recalculate the profit on disposal to see the accuracy or to check the accuracy. Now this is a more fair response. This is a good response which can basically enhance the understanding of a junior auditor. Now, a junior auditor would be more aware of the procedures that he is required to do. So, from where he's going to pick the figures and what he's going to calculate and what he's going to check. So, this is a more good response which includes many of the things. Now, same is the case with inspect the asset register to confirm that assets have been removed. So, it is solely equal and there is no need to add anything. Whereas if confirmed from depreciation schedule that depreciation is not charged against the disposed asset, once again, this is enough and it could tell the whole story and everything is clear from it. Now you can see that this is a more complete response and you can easily get good marks if you are writing the responses like this. So you should try to copy this style, and this format will help you, and you can try to write audit responses for other audit risks as well that we have identified, like previous finance director left the company and it was discovered that he had claiming fraudulent expenses. Now what is the risk? There is a risk that sorry, there is the risk that many fraudulent transactions would be still recorded in the financial statements where they would have been written off. Now, once again, this is very clear audit risk. Now, what would be the relevant responses that one on as an auditor one should apply? Now, as we are aware that there is a new finance director now and he has taken the seat and he is in the company, so we should discuss what actions he have taken. The inquiry is very important and we need to maintain our skepticism high because this is not a specific head where these fraudulent transactions have been recorded. These fraudulent transactions would be scattered or spread over the financial statements within the financial statements. You can't judge that these fraudulent transactions would be only in the oil charges or stationery charges or admin cost or cost of goods sold. So these fraudulent transactions could have been entered in many of the heads of the expenses in the financial statement. So we can't point out a specific head. So what we will do, we will basically write here sort of generic responses and specific responses as well. So what is the generic response? Generic response is that we should increase our skepticism level. We should maintain a specific, a high level of professional skepticism, and we should be more alert to the possibility that there could be some transactions that are specifically done by the director, previous director, and they may be included in the expenses, whereas they should have been written off. Also, the company or the new finance director, what actions he have taken to rectify them, to identify them, and to write off from the sections, and what team they have made, and what actions they have taken, and how much or how many of that such transactions have been identified and rectified. So this is the response, two-way response that could have been used here, and it can earn you good marks. So you should be open to to the possibility of the risk and the application of the risk in the exam. Now you can achieve that when you are practicing at your home. So this thing cannot be acquired immediately in the exam. You have to practice it again and again and again. So you should write 5 to 7 questions, and you should write simple risk. If you are writing simple risk, then you will be able to identify your risk and the relevant response against this. So if you are not clear on your risk, then you will not be able to write correct response against that risk, because risk and response are interrelated. They are related with each other. So if you are weak in one area, automatically you will be weak in another area. Now, the other risk that is written here is 0.5 million of sales were returned in the month of May for sales of April. The sales which relate to pre-year are removed after year and should be adjusted accordingly. So what is the risk? There is a risk There is a risk that sales figure for this year may include some of sales that overstate the revenue and profit for the figure. Now, what should be our response? You can see the important things that are already mentioned in the risk, that we must focus on the post year, pre-year sales and post year returns. So post year returns and those post-year returns that are related to pre-year sales. They should be identified, and they should be adjusted, and they should be removed and reversed. Now, this is the basic response that we should write. Now, how can we start writing like that? We can obtain the breakup of these post-year and sales, or we can review a, a sample of post year sales returns and reconcile them with pre-year sales. So post-year sales return should be related to May, and pre-year sales in the month of April should be reconciled. So if there is a sale return in post-year sales that was related to pre-year sales, so this is the sale that we are looking for. And what should have been happened? That review a sample, this, and confirm that these sales are removed from the revenue for this year. Now this is a real simple response that could be derived from that risk that was already written on the left column. Now, what could be added in this important revenue stream? Now, to do this, if you want to add good points in your response, what should you do? You should think of the revenue procedures, the procedures that you use to apply in revenue section for different assertions. So basically the problem here we are dealing with is the cutoff problem. Now the assertion for which we are writing, as you would have gone through all the areas and you would be aware of the relevant assertion. So this is a cutoff problem and we need to check the cutoff. So how we are going to confirm the cutoff issue? We can also relate that a sale if a sale is done in a month of April, so this means that the goods dispatch note for that specific sale would have been issued in month of the May or April. So GRN is an important document to trace down that sale. And when a transaction is returned, there will be a supporting document to confirm that, and that document would be issued in the month of May. So, how can we add these things? Review a sample of post-year sales return and reconcile them with pre-year sales or GR, GDN, goods dispatch note, and confirm that these sales are removed from the revenue for this year. You can also ask them, ask the management to give the list of sales returned already removed by the management. So this would be one of the procedures and you can relate it with your own working. So this is how you are going to write down different types of responses against different risks that you have already entered. Now, before we are going to go for question answer session, I would like to also give you some suggestions for the related responses for these last two risks. Like auditor is concerned about the movements of goods in and out during inventory count. Now this is the risk. There is a possibility that inventory count may have been mismanaged and counting could include an asset twice or completely missed. So this was the risk that we identified. So what could be the relevant response? So we know that if there is a movement during the inventory count, how it could be recorded? There will be some goods dispatch note issued on that day. There will be some GRN or goods received note. So if there are some goods coming into the warehouse, good received note would have been issued. And if there are goods that are going out to the customer from the warehouse, there will be GDNs issued, means goods dispatch note would be issued. So we can trace down these assets which are basically moved during the inventory count by tracing them through GDN and GRN. So these two documents are the hints for us through which we will see the patterns and we will identify those assets that are in or out on that day, and we will confirm that whether they are included in inventory count or not. So anything that is not related to this year will not be included in the inventory count. So this is our objective and this objective should be met. And the last risk, where we are stating that loan contains minimum profit related covenants, and if these covenants are breached, the loan will be payable immediately. So response is very easy, because what is our concern? What is the risk? First of all, there is a risk that we have breached the covenants and loan is still written in non-current liability. Now, this is the risk and we need to check it straight away. So if we are going to write a simple response, what it would be? Now we need to see whether the company has breached the covenants or not. To do this, we need to actually recalculate the profit related targets. So this is our first response. And if we are in breach of these profit related targets, what we are going to do? We are going to check that loan is adjusted, or we can say charged to current liabilities. Now this is the initial response that we will write if we see the audit risk that we have written. Now how we can improvise, how we can enhance or increase our response according to the marks. If we are going to recalculate the profit related targets, first of all we need to understand what are the profit related targets and from which document we are going to get these profit related documents. Yes, these would be gathered from loan agreement. So we are going to write that review the loan agreement and confirm the terms and conditions attached with the loan as covenants. Now, this is the first step, and the second step is now and recalculate the profit related targets to see that we are in breach of these targets or not. Now, this is how we have improvised and changed a simple response into a more professional response. Now let's come to second point, that was check that loan is charged to current liabilities. Now this is the second point, check that loan is charged to current liabilities. So this is very much straightforward and we don't need to basically write down any supporting document to check it. This is enough. But the important thing that should be included is that check that loan is charged to current liabilities, and we need to ask the management or make inquiry with the management that if we are going to pay back this loan immediately, do we have enough cash resources, or if not, do we have any other arrangement, because it may raise concerns regarding the going concern of the organization. So inquire with management regarding the cash resources available for the company or any alternative if needed. And we also can also relate this wording with the going concern issue, that if they don't have any available resource, alternative resource, then what would happen? What effect it would have on the financial cash flows and the financial capabilities of the organization? So we need to see that as well. We could have to calculate receivable days or payable days or gross profit margins, extra. So all these important things are or should be mentioned if you have enough time. So you can see we have written, we have tried to write different styles, and we are writing the audit response for different sorts of audit risk. They differ with each other, but the psyche or methodology is very much same. You will start by looking at the exact audit risk that you have written, and you will convert this audit risk into a simple response, and then you will think of the audit procedures that you have memorized for that specific head, and should try to include one or two supporting documents or one or two procedures in it to improvise or to convert it or to get good scores in audit response. So this is how you are going to write audit response and audit risk. So I am hopeful you would be clear on this important topic, that how to write two styles of audit risk and how to manage and maintain a list of good audit responses. So please do try it at your home. There are 2 to 3 questions attached in the handouts. You can try one or two from them, and you should try to follow this approach as we have mentioned, we have seen in audit risk and audit response. So for the next half hour, we are going to look at your questions, the issues that you are facing at your end. So please, you can ask any question and I will try to give the answer of your questions. So, okay, so there are some very good questions asked by different students, and we will start. Yes, PPT is attached in the handouts, Prasad. And as far as WhatsApp group is concerned, well, we will see what we can do. Expenses understated. Yes, expenses could be understated. Kasser. Won't we mention IS 23, Sidra Aslam? Yes, of course. There is also another risk that is mentioned by Sidra, that we can also relate it with IS 23. Yes, of course, if this loan is taken for the capitalization or for the manufacturing of a qualifying asset. Yes, if this R&D qualifies for the definition under IS 23, yes, there may also be an additional risk that this asset should also, the interest cost of this loan should be capitalized in the cost of asset. Yes, once again, good, Sidra. So you are going good, but you also need to consider what audit response could have been written by you for this thing. So if we consider about the audit response related to this, we will discuss with the management regarding the criteria of qualifying acid, whether we see it would take substantial time to be manufactured, and if so, then we need to calculate and confirm that interest rate has been properly capitalized in the acid of in the cost of the acid. So this is how you are going to write the audit response, Sidra. So let's move to next question. Kessel, these are the generic questions. I picked like psychomore question, and I also picked a test your understanding from your book. And then there was another question that was Harding and Co. So all these are past paper questions, and you can get answers to these questions. Yes, Hamza, you can copy the data from question, but if you can do, yes, you can do that. But sometimes student complain that we were unable to copy the data under exam conditions. So yes, if you can do that, it's okay for you. Yes, Samantha, I'm sure you would be clear on that question. Walaikum Assalam, Tawfiq. Okay, Ryan is asking that will we get full mark for a simple response? No, you will not get full complete 1 mark per response. You will get half mark per response. To get full response, you should write a good professional response as we have discussed. Okay, so Mir Hamza is asking, is simple response enough or not? No, Hamza, I would ask you to write a good response, a complete response. Simple response is a process, and simple response is the first step towards a good response. So yes, you can start from simple response, but always try to include some of the important points from the audit procedures so that you can get complete 1 mark. Yes, Mahin, you can get the recordings of this, of course. Okay, Ghulam Murza, I will ask the team that if there is an issue related to PPT file, we would try to do some alternative way so that you can download that. Maha Khalid, the recording will be available for sure. So there's a question from Isha Naveed, that response too long for just 1 mark. Okay, so as you have, if you have identified only one risk, then you will try to write one response. But if you are going to write two risks, then you should write at least two response. Each response should be related or linked to the first risk that you have identified. But as far as your question is concerned, now this response is not too long. It is basically an enhanced version of simple response. So uh, you have to write a complete response according to the examiner's approach, which covers the important issue that is identified in your initially recorded risk. So you should not go too long. You should write two responses. You may write only two responses per risk. This would be enough to get complete 1 mark. Shah Hussain is asking a question, sir, isn't there risk management may manipulate expenses in order to maintain covenant profit figures, because if it's breached, they will have to pay them. Yes, Shah Hussain, you're right. This is also another risk. So we have just taken down some of the risk, for example, to understand how these risks will be explained and written, and how the responses, relevant responses would be identified. So yes, there are some two or three more risks like you identified. Very good. So of course there is a chance of window dressing, or I would say the cooking of financial statements. The risk will enhance. Of course, always there is a risk in accounting estimates are always vulnerable to this or exposed to this risk, because estimates can be changed easily. So window dressing can be done by the management. Yes, this is the right risk. And what think of the audit response, Shouts? What would be the response for this risk that you have identified? And next question is by Hijab, that explain the audit response for the inventory. Yes, I have explained it in the previous points. We have discussed the audit response for the inventory. Yes, if your typing speed is slow, then you should try to more focus on the CV practice platform so that you can enhance and you can maintain a good typing speed. Mir Hamza, simple response is minimum, is minimum to acquire good marks. But if you want to have marks more than 70 or you want to cross 65, then you should not miss any mark or score from this area. So then you need to basically improvise, and you should convert your simple response to a more professional response. That is what I would suggest. So what is loan covenant? Munesh is asking. So these are the terms and conditions, Munesh, that are attached or that is written in loan, that we are providing you the loan, but you need to cover, you need to maintain this level of profit. So if your profit is decreased from 3 million, you will have to pay the loan back immediately. So this is called, these are the loan covenants that could be attached, and they are sometimes very risky and they can increase the risk of window dressing and the non-classification and classification of liability area. So Prasad is asking to repeat the structure of response. Yes, I would suggest that uh, first of all, write simple response from the risk, same risk that you have identified. Then think of the relevant procedures, and from that procedures include doc or procedure from above process into your response. So that's a simple three-step structure, and I have tried to do that in different 3 to 4 risks. I have repeatedly tried to apply this structure, and I have constructed some of the audit responses for you, and I am hopeful that Prasad, you would be clear of that. Okay, now Ibrahim is asking that what if we state an accurate document but we apply wrong procedure, like instead of writing inspection we write review. So it doesn't matter, Ibrahim. Normally, if you have written an alternative audit procedure like inspection and review, they are basically same. So they means the same. You can write check, you can write confirm, you can write reconcile, you can write tally. So they don't matter to that extent, unless that you have written a very anonymous or a different word. Ryan, I have answered for your question. Kasser, the questions that we are discussing are in your exam kits in BBP and in Kaplan as well. So you can go through there, you can read the answers, and you can try these things very easily. They are available on different various internet resources. Umar, if we write the simplest responses, we lose some of the marks. Examiner don't like that if someone of you just copy paste the risk and don't go in detail. So he wants you to be in a little detail, and he wants you to write the, the, the important document through which you should relate and what you should calculate and how you should calculate. So you should give a little bit of more detail to your simple response. Otherwise, it will not get or sketch you that enough marks that level. So always try to go in detail of the response. Yes, Adil, you can write like this. Adil has asked the question that uh, should we can say disclosure may not be adequate. Yes, we can say that disclosure may not be adequate. This is one of the risks, and we know that this is one of the assertions like presentation. So it's a matter of presentation assertion. This could be the risk, and we can say that the research and cost the development cost may not have been disclosed accordingly or according to the IS 38 requirement. Yes, Adil, we can say that. Okay, so Adil is asking that which accounting standards to revise. Yes, this is a very important question. Now, IS 2, IS 16, IS 23, IS 36, 37, 38, and IFRS 5 and IFRS 15. So I would suggest that kindly revise these important audit risks or accounting standards, and you can go through them by going through your own financial reporting book. You don't need to refer to any other very detailed book. You can revise them from your own accounting book which you used last session or you are using this session as well with your audit. Okay, so Amna is asking that how much time should be ideally allocated to attempt the audit risk question. Okay, so you can see Amna, the requirement like this section B, it contains 12 marks. So ideally, you should multiply it with 1.8, and this is the time that is available to you. So for example, to do a question of this like this, which carries 12 marks, you have 22 minutes or 21 minutes. So you should multiply it with 1.8 and you will get your required time. This is how you are going to tackle it. So Mufaddal is asking, is the audit response in audit is same as substantive procedures? No, it is not same because procedures are very detailed and we don't need that detailed response, but we need to just link it so that any junior, if any audit junior is reading the response, so he might be aware or he should know that from which document I am going to take this and to confirm this. So this is how you are going to do. Sometimes you can write the audit procedure as well, but you don't need to think of the procedures only. So you can say that it would be the audit response would be the summary of the audit procedures. The summary of the audit procedures that are relevant. If we are talking about the cutoff procedures, cutoff assertion, all the procedures or of the cutoff can be summarized and audit response can be made from them. Let's see, Umar, if we can engage in a WhatsApp group or not. Let's see. Okay, Kaisar, let's see. We will discuss with the management and we can discuss this thing. Zainab, we have discussed this your idea that can we write substantive procedures for audit response? No. Audit response, let's say there is a risk that receivables may be overstated and provision or allowance for the receivables may have been missed. For this audit risk, there are 5 audit procedures in your book. If you are going to write these 5 audit procedures, it will take a lot of time, and you have got 1 marks attached to a response. Now, why you are going to give 5 or 6 minutes by writing these procedures and you will waste your time? You can do it if you have time, but you are going to get only 1 mark for response. So 3 to 4 lines are enough. And what you are going to do, you are going to summarize the procedures from these receivable areas and you will write it in a paragraph format in your response column. Yes, Samantha, I think it will be on that local channel. Yes, you are right. Yes, Zainab, there are many questions like sycamore hurling. There is a question like uh, transfer construction. You can see BVP kit or Captain kit. There are 9 to 10 questions tabbed under the head of the audit risk. So you can go through them. They are very important questions. No, Ryan, I don't think that you need to go through those December webinars. Yes, Shao San, you are right. Good. Skepticism, increase in skepticism is a relevant audit response. Yes, Shah, you are good. You are okay. Isha, this is not actually the case that the examiner will deduct the marks. Actually, we have not written the correct or complete response. So if we are going to just copy paste the response, we are just going to include the word check and we will write the risk afterwards, the word check. So examiner has stated that I don't like this word check. So check means that you just start a response by the word check and just write the risk subsequently. So check that research cost is not capitalized. Check that development cost is according to the criteria. Check that the inventory is at lower of cost or NRV. So this is a very umbrella stage risk or response. You need to go in a little bit detail to give a little explanation that from where you are going to get the figure of NRV and from where you are going to get the figure of cost and how you are going to relate it. So you have to write with with a little detail so that the examiner may understand that you are aware of the relevant response or not. Yes, Mufaddal, we may relate to the assertion sometime, but it is not as necessary as we do it in the assertions. So when we are writing the procedures, we always try to relate it with the relevant assertion. But when we are writing the response, it is not necessary to link it with the relevant assertion. It is not necessary. But I'm talking about the assertion so that you should be aware of the fact that the response is linked with the assertion. You may not write the assertion in your answer, but you should keep that assertion in your mind so that you can think of the different procedures and you can include them in your answer, in your response. So the session that I was talking was to just give you an idea that they are important, and when you think of them, you can trace towards a better response. So you don't need to write the relevant assertions in every response, of course. Yes, Prasad, you have asked a tricky question that if we write the disclosure risk in the cases wherever applicable. Now, consider it in your mind that disclosure risk will always be a secondary risk. What I meant to say is that if we are talking about IS 38, research and development cost, the most important risk. Now, examiner has always mentioned that student must prioritize the risk. Student must prioritize the risk. The higher risk should be written or given the first priority. So the most important risk in IS 38 regarding the R&D is that development cost has been recorded whereas it has not fulfilled the criteria, or research cost has been recorded whereas it should have been expensed out and someone has recorded it as an asset. So this is the most important risk. Yes, there are some secondary risk like the relevant impairment calculation or relevant amortization calculation or the disclosures. So disclosures of IS 38 are secondary risk. First of all, you need to write the main primary risk. If you have enough time left, then you can write the supporting risk. Otherwise, stay on the primary risk. But when we are talking about some accounting standards that are basically disclosures related, like IS 24 related party transactions, IS 33 EPS, IFRS 9, IFRS 8 segmenting reporting, which only have the requirements related to disclosures. So if examiner asks you at double A level, at affiliate level, examiner normally don't ask IS 24 related party or IS 33 and IFRS 8. So disclosures risk will not become the primary risk at any level at this stage. Yes, Isha, if you have written everything right, then examiner will not deduct the marks. So that is correct. Don't worry about that. Okay, so Ryan has asked that can you explain some of the common mistakes that normally students make? Yes. So these are some of the common mistakes that students make at audit risk level. So instead of going into discussion about the inherent risk and control risk, what they do, they just try to define the audit risk model, that what is inherent risk and what is control risk. So they will not be able to get enough marks because you are engaging yourself in the definitions of the audit risk that is not asked at that level. Lack of understanding of what audit risk is. Yes, most of students don't understand what is the difference between accounting treatment and the risk. So accounting standard is not the risk. Violation of the accounting standard is the risk. And not providing an adequate response to the risk, we have discussed thoroughly on this area, and we were focusing that how can we enhance our ability to write a good adequate response. The next common mistake is a limited range of risk identified, often just focusing on one area such as going concern. So yes, this is one of the area where the student is focusing on two or three or four risks and he is not taking consideration of other risks as well. So this is another risk. Also, there are some other common mistakes related to audit response, like a common mistake made by the candidate is to provide a response that management would adopt rather than the auditor. So sometimes what students do, they just try to write a response that is relevant to management, not relevant to the auditor. And responses are not as detailed as audit procedures. Instead, they relate to the approach that auditor will adopt to confirm whether the transactions or balances are materially misstated. So if that is the same thing, that you should not copy paste the thing. Auditor responses should not be too vague, such as increased substantive testing. So instead of writing these increased substantive testing, you should actually circle out and point out the substantive testing that need to be increased. And also, in addition, candidates must ensure that they do not provide impractical responses. Yes, impractical solutions or responses are not basically exemplary, or they are not welcomed by the examiner. So always try to avoid these sorts of areas. So dear students, that's all for today. We are running out of time and our time is just going to end now. So that's all today. That's everything that we needed to discuss. So hopefully see you tomorrow, where we are going to discuss the control risk area. So stay blessed and hope for the best. Good night and Allah Hafiz.